ask questions via the online chat function, and also Jane will have that microphone moving around the room. We're going to invite Shingi Maremba, Director of Equisoft South Africa, to join you on the stage there, Simbongile, and Jeff, Chief Operations Officer at ZEP in Kenya. I know you are all primed online and I can see your picture there. So thank you very much indeed for joining us. Whilst Shingi gets up onto the stage, Jeff, I might actually turn a question to you just whilst the audience waits for that to happen on stage. But our first question was about a matter of cost. You know, one of the reasons why microinsurance programs have not succeeded in the past is that it's been hard for insurers to make them profitable. So I wonder if you would like to start that question off just whilst we wait. It looks like Shingi and Sibongile are about to join us. Jeff, do you want to start us off?
Okay, morning. It's still morning in Harare, so I'm currently in Harare on leave. Morning, all the board members. Congratulations to Pet for being reappointed chairperson. Yeah, so the question, please, is it a matter of cost or can these programs make a profit? I will share with you my experience based on what we do at ZEP. Obviously, yes, there's an opportunity to make money from these microinsurance products. ZEP has done very well in microinsurance, and we have made an impact in several African countries. In Kenya, we generate roughly 250,000 US on micro insurance products, and also around 200,000 on agriculture, which is about 450,000. The loss ratio on those products is below 40%. In Zambia, we support about 1.1 million farmers through a government-backed scheme. Zambia has been a very successful initiative which we have done, partnering with the Zambian government. And look, with agriculture, the loss ratio fluctuates. And but so far, the current agricultural season, the total premium for that facility in Zambia, where we support 1.2 farmers, is about $5 million US. The loss ratio for 2021 is around 33%. We move to Rwanda. Rwanda, we've done quite a lot of work in terms of microinsurance. It's mostly credit. The premium is small, but we have made an impact to 750,000 people. The premium is small, as you know, in microinsurance, total premium of 150,000. We moved to Uganda. It has been a brilliant success story. Uganda regulator has actually come up with specific regulations for microinsurance. And in Uganda, we generate around 300,000 US. The loss ratio for those programs is all below 50%. So in total, we generate around 6.6 million US. So yes, it's true that it's not just about costs. Of course, you know, ZEP is a Pan-African institution. We also want to make impact to the communities so that we increase the penetration of insurance in all these key markets. Thank you, Liz.
Thank you so much, Jeff. That's really interesting and interesting to hear the you know, that what's going on in the different markets. I know that one of the barriers to this has always been access to the numbers of people in volume. And Shingi, if I can turn to you, technology has obviously got a huge role to play in this. As our question really is, what though, is technology an answer, or do you view it as an enabler, that it's got to be used in conjunction with other policies? Hopefully you can hear me there, Shingi, and you're able to take that one on.
Yeah, I can hear you.
Proceed.
Can you hear me?
You're a little bit faint, but we can hear you.
Okay, I'm gonna make my mic a bit closer.
That's better. Thank you.
Better now.
Yes.
Yeah. Yeah, with the level of challenges that we currently have because of the pandemic, if you don't utilize technology, it will be very difficult to survive in today's world. So technology is a must. It's no longer a thing of optional kind of thinking in a boardroom. Everybody or every business is now turning out to be a technology business. So I'm talking about the enablement of customer onboarding through technology, and also the enablement of doing, simple claims through technology without engaging with anybody. So those are the things that most businesses, especially insurance, take longer to make decisions when it comes to technology, and it's impacting their growth, and also it leads to slow insurance penetration across Africa.
Thank you. I know I was talking to somebody the other day who was saying that he has a mere 60 million policyholders globally in the microinsurance business. And obviously tomorrow, I think you and I, Shingi, are going to be involved in a roundtable where we talk about how can insurers physically manage a great swathe of policyholders coming on board. And I wonder, Jeff, if I can bring you back in and say, just ask you really, do insurers have the appetite and the capacity to actually deal with what might come at them if they engage with microinsurance?
Yeah, so thanks very much, Liz. I think it's a great question. Yeah, so like I said, I think we work with various insurers in across the globe, especially in Africa. I can confirm that we have done microinsurance deals in Nigeria, Burundi, Kenya, Tanzania, Rwanda, Zimbabwe. We work closely with Zimnat Econet. Zambia, like I've mentioned below, Malawi, there's something which we are working on currently. So there are quite a number of insurers who are keen to work on these products. We as ZEP actually employ a full, actually, to look after the micro insurance space. It's actually a team of 3 people, and they have developed these products so successfully. I'll tell you that we have a product called collateral replacement indemnity, which increases access to mortgages. As you know, if you approach a bank, they won't give you 100% mortgage. They will give you 80%. They'll ask you to pay 20% upfront. So we cover that gap so that the poor can access affordable housing. We have done that product successfully in most of the sub-Sahara African markets. So yeah, I think it's a product which is selling very well. There are also a number of other initiatives which we have done in other Eastern and Southern African countries, like I've mentioned before. Yeah.
Yeah, thank you very much, Jeff. Shingi, perhaps I can turn it back to you and just ask, are you seeing enthusiasm from lots of African insurers to move into this market at the moment? And to make technology the answer,
Yeah, there is, because technology enables you to reach different markets without, using so much resources, and it also enables you to be more efficient by automating the back-end systems, or like what Ms. Swela shared earlier on, that if you don't have the capabilities at the back where it processes things without resources going to take a paper from one person to the next, it makes an insurer more capable to reach out to new markets. So yeah, we're seeing interest from many insurers to grow across planes, across products, across countries, to sell specific products, because technology is enabling them to do that.
Thank you very much indeed. I know that we have Leslie.
Yeah, Liz, if I can add, Liz.
Of course.
Yeah, if I can add, I think technology is I think it's a key enabler, considering that Currently, a number of our countries, key countries, are on either a total lockdown or hybrid. You go to Kenya currently, they have just extended the lockdown by a further 60 days. The positivity rate is currently sitting on 10%. You go to Zim, I think it has come down. Zambia and Zim are below 6%. And so technology is key because most of these economies rely on the informal sector. And with the informal sector, they've been heavily impacted. So it is important that we have technology so that some of these products can be accessible. Rwanda has been a very good example. If you look at Rwanda now, they are supplying drugs with drones. And they've now started trying to insure these drones. And the drones are not very expensive equipment. And so it's another opportunity which can also be used to increase the insurance penetration in various sectors of the economy. But the challenge is really for the regulators to ensure that for microinsurance to succeed, they need to vary capital levels for general insurance versus microinsurance, because the risk landscape is different. The capital required for microinsurance is completely different from general insurance. So if they lump them together, there will be very few investors in the microinsurance space. Thank you.
Thank you very much. In fact, that's probably a very good opportunity to bring Simbongile back in to the conversation if we could, because obviously coming from the regulators, you might be able to address that question that Jeff has just raised. And I was also going to ask you whether you feel that governments have a role to play in supporting these kind of projects, so perhaps enabling policyholders to afford the premium and working more closely with insurers. But obviously that probably comes via you at the regulatory office. Before you answer, I just want to also encourage our audience just to ask any questions. We will have a couple of minutes here to get questions from the audience, and you guys online are being very, very coy today. So Simbongile, what from a regulatory perspective, what do you think the regulators with the backing of government can do to help the industry?
Liz, can you say the question again? She didn't get it.
Sorry. I was just asking whether governments have a role to play in this, in supporting policyholders, perhaps by supporting premium payments and things like that, and whether the insurance regulator has an increasing role to play in terms of enabling this kind of insurance.
I do think that governments have a role to play. They cannot be an observer in terms of facilitating this technology, perhaps to the less privileged people, and also in terms of making it not so expensive for the young insurance companies who want to venture into microinsurance. Thank you.
Thank you very much. Jeff, from your perspective, do you get the support that you would like to see from regulators and government? Would you like more enablement from the authorities?
Yeah. Thank you. I think again that's a great comment. Yeah, we get a lot of support from the regulators in all the key markets. We call them double down markets where we are involved. In Kenya, we have been working very closely with the regulator in Kenya, Mr. Kiptum. And in Kenya, the regulator has set up a microinsurance guidelines. These were set up in February 2020. And there's a drive to promote microinsurance. You go to Uganda, the regulator in Uganda is very far ahead in terms of trying to grow the microinsurance space. They actually have separate legislation for microinsurance versus insurance. You go to Rwanda, I think efforts are being made. Tanzania is the same. You see, within the Eastern African community, we sponsor what is called the East African Regulators Forum, where all the regulators in Eastern Africa meet annually. They discuss issues of common interest. They discuss law insurance penetration rates. How do we improve this? And I'm happy to learn from Mrs. Weller that Zimbabwe is also doing a lot of work. And we've done a lot of work with two companies currently, Zimnat and Econet, in terms of promoting microinsurance. What I'm just also want to comment and also hear what Ms. Weller's views are, is that we also need to be in the forefront to ensure that we support the uninsured. And I think the Zambian government has taken a leaf, like what I've said, that the FISIP scheme, which is an agriculture support scheme in Zambia, the premium used to be around 10 million US, but because of the depreciation of the kwacha, but now the kwacha has now regained its strength. It's improving against the major currencies after the recent election. So we see those premiums going up. So definitely there's need for government support. We also need like I said, the government to support life insurance, because currently as it is, the major product being sold, especially in Southern Africa, is funeral insurance. But there are people in the rural areas who need cover for their livestock, cover for their houses, so against unknown eventualities. So there's need for us to ensure that there is increased awareness so that even people in the rural areas can buy insurance. Thank you.
Thank you very much, Jeff. We literally just have a couple of minutes left, and I know we do want to get to some questions from the room. But Shingi, I just wonder, obviously you're not an insurer, but I just wonder whether you have common threads that you're hearing from your clients about the problems they face. You know, what do they see as the biggest barrier to microinsurance programs?
I think the biggest thing that they face right now, it's more of the capabilities to enable them to do electronic contracts, because electronic contracts are now being considered by so many insurance regulators across Africa, and the microinsurer, some of them, they don't even know. So that's one thing that I find to be very common across microinsurance in Africa. And also the capability of creating these contracts in front of a customer. You know, as I alluded earlier on, that technology is now the enabler. Customers of today, they don't want to see an insurance advisor or broker face to face. So that brings technology into play. Whether you like it or not, you have to talk to that person through a Zoom meeting or something. And regulators, they're now considering the financial needs analysis that you do through Zoom as a contract. And those are the things that I find to be very challenging to the microinsurer. They are not aware of that.
Okay, thank you. I think that's something that we will be exploring again through the rest of the next couple of days. But thank you for that, Jane. I wonder, we as I say, the people online are being very quiet and not asking too many questions this morning. But I wonder if there's anybody in the room who would like to ask a question before we wrap up for lunch.
Thank you very much, Liz. Thank you very much.
I'm not sure if you're able to hear us, Jane.
Yeah, she can hear you. It's just that she's fixing her mic.
Thank you
very
much.
Thank you, Chingy. We can't see you at the moment online, so we're not quite sure what's happening in the room.
Yeah, thank you very much for that comprehensive discussion with the panelists. I now wish to open the floor. Jacob, could you kindly hand over the microphone? There's a hand here. Any other person? Okay. Yeah, there's several questions, so we need to move. We'll take all the questions and then we can have you respond all of them just to save on time. Eh? Is that okay?
Yeah.
Yeah. Okay.
Yeah. Thank you, Liz. This is Shovik Banerjee from Continental Re. I was hoping that Leslie Dovu would have a comment here from ARC. I believe he's in the room, and I will make the comment on behalf of him if you allow me, Leslie. I don't know whether you are still here. One of the most important things about microinsurance, or one of the most popular things here we should focus on, is agriculture. Okay, and I have not heard too much being said about agriculture during this session so far. We have heard a lot about group credit life and focusing on the low income earners. But I think what we are trying really hard at Continental Re is to focus on agriculture, predominantly the parametric aspect of agriculture insurance, so that people with using technology and not spending too much money in going out to the individual farms are able to take or organize for the insurances of those low income earners who most need the benefits of insurance. And I remember when I was a youngster in insurance, I used to get my hands and feet dirty walking with the bank managers into unknown fields, trying to figure out which farmer had a fish pond and which farmer was not able to rear his fish properly and all that. But today times have changed, and we are able to, with the help of satellite imagery, understand exactly where the pasture is and where we are able to, or how we are able to make claim payments even without going anywhere close to the farmer. So I think that's something very important, and I'm happy to say that Continental Re has taken a lot of steps in organizing for parametric insurance, and we are making major steps in agri insurance. Thank you.
Thank you very much for that comment. There are several questions. Maybe pass on the microphone. There's another hand also in the back. So when you're done with him, we can pick all the questions, then you just, because most of them are comments, huh?
Yeah.
All right.
Thank you, Jen, and thank you, the presenter. My name is Crispinas Mugwanga from CIC. My challenge is most speakers talk about microinsurance, but we as the insurance people, we are audited on return on investment, and therefore profitability is key. How long does it take for microinsurance to become profitable to an insurance company? Or what volumes should one go for? Thank you.
Yeah.
All right, thank you. My name is Erastus Ochieng from Africa Re, and I just have several comments to make based on this discussion. The first one is from my observation on some of the successful programs that I've seen in the microinsurance space, agriculture, is that most of them have to be compulsory in nature for them to be able to grow up to scale. And even the that we are talking about in Africa, if you talk about Zambia, Nigeria, Kenya, we find that the programs have to be formulated in a way that it is compulsory for the beneficiaries to be able to access them, for it to be able to reach scale. So it can either be through government, it can be through a financial institution, it can be through other aggregators that are working with the general public. And there are some that have been fully voluntary, and I don't think we have really successful instances where that we can be able to speak that have been sustainable over a long period of time. So I think as part of growing microinsurance, I think that's one thing that we may need to look into. And maybe also to add on the comment from my brother from CIC, is that going into microinsurance takes the insurance company from a space where they don't usually operate. So a lot of investments need to be put in place in terms of human capital, in terms of technology, in terms of access to the market and distribution and so on. And most insurance companies are not patient enough, or as we are talking, there has to be return on investment at the end of the day. So how do we get the necessary capital to be able to innovate, to be able to go out, and over what period of time will we need to be able to generate enough business that will make sense to the insurance? And, Yeah, and also in terms of regulation and where government comes in some markets, we have to look at things, for example, to do with taxation. Are there any benefits that the microinsurance products can be able to get at appropriate policies? And one of the key things that we usually have to look at is because we have to develop robust products. One of the key items is data. How do we get the right data? How do we access it and be able to use that data to develop the best products for the market? Thank you.
Okay, thank you very much. Those are quite a number of questions. I don't know if you'll take them. Before we go to them, okay, fine. He's already holding the microphone, so just proceed and ask.
Okay, thank you. My name is Leonard Maweo from Nepian Reinsurance Limited, handling micro and agriculture. And mine, I think more of a comment, especially more of into agriculture insurance, of course, which is a part of the broad micro class. And based on our market research, we have found out that the biggest challenges on this line, we actually grouped them into 5. First being data, number 2 being cost, number 3 being capacity building and the mobilization, and then government policies, where we looked at, when you look at most of the micro products, there is a big challenge when it comes to data. And of course, you cannot be able to structure any insurance product without adequate data. But I would say, of course, when we look at agriculture, we are happy that something is happening. We have companies which are coming in to support in terms of data. And just to mention a few, we have a company called AgriTask, which is doing a great job in terms of providing data to model agriculture products. We have Vandasat, we have Pula, we have Risk Shield and others. So of course, something is happening, but a lot still remains to be done on this line. The second one is cost, because when you look at most of these micro products, they are really, the trigger payout is more frequent. And therefore, when you try to do pricing, they tend to be very expensive. Because, like, for example, when you look at most of the micro products for agriculture, you'll find premium rate ranging between 15 to 30%. And that brings the aspect of affordability. But also, I'm happy that, of course, we have organizations which are coming in to support this. We have Insure Resilience, we have Bill and Melinda Gates. They are really coming in, but still a lot really needs to be done. And also government subsidies, they really need to be lobbied for in order for these products to be affordable. The other challenge is capacity building. Most insurance companies, they do not want to venture into these lines just for simple reasons. You do not write what you do not know. And therefore, there is a great need for investing in terms of training. So that there can be built confidence to do this business. And I'm happy we, as Nepian Re, we have partnered with Africa Re, Continental Re, and Alliance. And we are doing trainings to the African continent. We had a very successful 6-week training for Kenya market, and we are rolling it out to other markets. Then I think the other biggest challenge when it comes to micro is mobilization, because these products, they really generate very small premium, and it will not be a motivation to any insurer to insure 1 or 2. So you really need masses here. And I'm happy that governments are coming in terms of supporting mobilization. We have a case of Kenya, the Kenya agriculture product, the Uganda agriculture product, the Zambia one, and the Nigerian ones. And also many others are coming in order to support mobilization. So what I can say is, of course, there are a lot of challenges which are still there, but the future is bright. A lot of interventions are happening. And of course, I'm sure this will be the space to invest in come even 5 years time. So even in terms of ROE, Of course, with so many interventions which are happening, of course, the returns in investment, they are going to be very attractive on this sector. Thank you.
For that comprehensive report. Before I hand over to the panelists, there is a gentleman at the end who was among the first to raise his hand. I just want to give him a session, then we can close.
Thank you very much. My name is Achavala Mumbi from One Life Zambia. Mine is just a comment. I think just speaking of experience that we've had in microinsurance, we underwrite a product called IO, which is a partnership with MTN. And I think we have seen a lot of successes in that area. We underwrite, I think, over 1 million policies, and these are month-to-month policies. So with microinsurance, I think it's important to note that you need to have a big brother behind you. They give you the critical mass. And I think the gentleman who spoke before me was talking about getting some kind of compulsory cover. What we did with MTN, it was a loyalty program first, where just by you being a subscriber, you get some kind of cover. But shockingly, in Zambia, we found there was a loyalty part and a paid for cover. And the paid for cover grew extensively. We've had to review the product. I think we've reviewed the product twice. And the covers are just, the policies are really sustainable, I think. So normally with microinsurance, you find you have someone who's got cover for a month or 2 months and they drop off. But for us, I think our persistency ratios are quite good. And I think it's a good sign that people are actually appreciating insurance. The lower end of the market are actually appreciating insurance. And we're hoping that this trend will continue, because the moment you have people paying for insurance, it's a good sign. You can now start exploring other insurance covers, because the difficulty is getting people to actually pay for insurance on a consistent basis, especially the lower end. So once you get that right, is when you can now start exploring and adding more covers. If it's funeral, you add some kind of elite cover just to ensure that the people get the value for money. Thank you.
Thank you very much. I now hand over to our panelists to conclude.
You can start. Yeah.
Right. Okay. So it's
so many questions. Yeah.
I'll try to cover what I got. Even where there were comments. I think agriculture. I think even in my submission was a major talking point. It was most of the revenues which I was reporting was to do with agriculture in Zambia. In Uganda, we do the agriculture consortium, which is quite big. And also, look, there are a number of brokers who have been very active in developing these micro insurance products as well. You go to ZIM, you find Minerva is very active in developing micro insurance agriculture products. They have a product for blueberries, which they've done successfully, but the losses in the first year. You know, the problem with agriculture is that it's very, very volatile. You look at Zimnat, which is one of the biggest insurers in Zim. The agriculture book is close to 10 million. So there's a specific focus towards agriculture, be it micro or even the conventional agriculture insurance. In terms of the return on equity and volumes, we are selling a product with very little premiums. Discussing with our in-house actuary, I think Kenya and Zim, they price these products very well. So you need an IT system so that you reduce your costs. When we are doing the collateral replacement indemnity, this product is purchased online. We have invested in a system, so the loss ratio is low, our expense ratio is low, so our profit margin is quite high. If you look at the FISIP program, I always want to refer to the Zambia-backed government product. because I think it's a successful product which you have done with the Zambian government. Yes, look, 1 year the loss ratio is 90, the other year is 120, but for the year under review, 2020, 2021, the loss ratio was 34%. The premiums are also very slow, very low. And you need to ensure that the payment mechanism is easy and simple to use, because you are dealing with very small farmers right in the bush, in the villages. So it's important that you invest a lot of money in technology so that the product is easy to use for the farmers. Thank you.
Thank you. Our time is really spent. I want to give each one of you at least 2 minutes. We wrap up because it's already going to 1:30. We should be doing lunch now.
Yeah, I will start. I can, relate to the gentleman who talked about the example for AO. AO is an MTN and an insurer in South Africa. They came up together and they brought out this solution whereby if you look at the resources as in human count within the business, they are so little. And yet they go across the African continent and providing solutions for small or micro, businesses. That's where technology really enables a micro insurer to do anything, because the tech will do everything for you from, onboarding, even into processing of your claims and everything. Whereas if you don't use it, it will become very expensive, like what was being explained right now. With technology, it enables you to maximize your profits, and the return on investment from a technology point of view, we normally project up to 18 months. That's when you start seeing, business making sense, because without technology, it will be very difficult as your margins will be very slow.
Thank you very much. And
yes, I think in terms of reducing costs for microinsurance as well, from a regulatory point of view, I think regulators must consider moving from rules-based supervision to risk-based supervision, which seeks to align the capital that you have to the risk that you are holding. In that way, I think the costs will be minimized instead of thumb-sucking the minimum capital for every micro insurer. Thank you. I think that will assist.
So thank you very much. We are actually out of time. As we want to prepare now to go for lunch, but we'll be able to run one advert for Grandry. Grandry is one of our sponsors, the platinum sponsor. So we listen to the advert and then we can break up for lunch.